What's going on, traders? Welcome back to my YouTube channel for another weekly Forex outlook and reviews. I hope you're doing well. This week, we're going to be going over 10 pairs as we usually do, and the 10 pairs remain the same. As you can see here from top to bottom, we're going to be starting with pound USD all the way down to gold. Now, last week was an absolutely exceptional week for trading. The momentum was in the market, the volume was there. And to be brutally honest with you, when some of these structural lows were broken, the markets just kept continuing to go down and or continuing to go up. So we're going to have a look at what the week has laid out for us in terms of some of the structures that we can be working with. And yeah, let's hope that we can have another amazing week. Some traders are putting messages in the comments below saying, Rocks, you called buys, you called sells. I just want to remind you here now that what I'm telling you is of my own opinion. The analysis is for at least 24 to 48 hours, as I always say, from Sunday open. But as far as I'm concerned, checking over some of the calls that I made last week, the markets have played out absolutely perfect. But look, I'm not here to carry you guys or ladies. I'm here just to give you my thoughts for you to adopt or learn from my thought process so that you can wake up each morning, clear your charts, do your analysis, and get a new bias for the week. Other than that, I'm ready to start. Let's see what the news has to offer us by taking a look at the calendar. So here we have the calendar moving into next week, and you can see that we have quite a bit of red folder news. Now, don't be scared by this, traders, or don't let this put you off, because when there's red folder news, that means that there's going to be a lot of volume in the markets. And we can almost guarantee that the markets are going to move. Now, for some of you, you don't trade news. I don't personally trade news, but I'm definitely going to trade the consensus of the news following on maybe an hour after the news has been released and or the next day. And you'll find that if you do incorporate just enough in terms of fundamentals into your technicals, you can give yourself some really good opportunities or find yourself in some really good opportunities. So moving into Monday, you can see here that we have all a day actually OPEC meetings, which will affect the markets as and when they decide to move. I wouldn't worry too much about this. Just be very cautious in terms of risk management. Moving into Tuesday, we have some Aussie dollar news for the morning. If we have some good or bad news, you can be sure moving into London Open that we're going to get some great movements off of that. We have some evening news, and by this time, most of us should be out of the markets. But with dollar news coming around 4 p.m., or sorry, 3 p.m., that should help us moving into Wednesday. Wednesday, we have news for New Zealand dollar. New Zealand dollar news really does move the market, and you probably find that more than any other news, that the New Zealand dollar will react the most, whether it be positive or negative. So look out for that. That'll be absolutely fantastic. And then as we wake up for the London session, we can see where we're going with this one. Moving into Thursday, we have some CAD news at 5 p.m. as well. And then moving into Friday, we, of course, have NFP. Now, you will notice with most of the news, other than Monday, the OPEC meetings, they are in the evening, which shouldn't affect your trading. One or two things will happen. We'll have slow market conditions on those symbols or currencies up until the news. And then obviously in the next day, we'll be able to carry that forward. And or you'll have some really good moves in the day, and then come the news, you won't have anything, depending on if the news is priced in. Regardless, this is the news for next week. Be very aware of this. And without further ado, let's get on to the analysis. So the first pair that we're going to start off with here is on pound USD 4H time frame. So last week we spoke about price creating new structural higher lows here, and price creating the new lower high as part of the downtrend. So the idea was to see if we get a behavioral shift above structural highs to look for continuation buys. And if not, then we just look for the shift below this structural low here to look for continuation sells as part of the overall downtrend. Now, it's pretty easy to trade pound USD last week. If you got into some of these moves, absolutely fantastic, really well done. And as we can see, moving into the end of the week, we had a slight correction on around 50% of this move. Now, what we have to understand here, traders, is that the overall consensus of the market is still trending down. Price is still making lower lows and lower highs. And with that being said, the idea is this: unless we see an absolute structural change or behavioral patterns that resemble a bullish structure forming, then in theory, we should just be looking for those sells. So what I'm going to be looking for moving into next week, first and foremost, is how price is reacting to in and around this area here. The reason for that is because we can see just to the left, we have a wick rejection where price reacted from. Now, this wick rejection has been created just as part of the shift of momentum to the downside, not so much so that orders are sitting here and price should react as a resistance to see price continuing down, but more so the fact that price has created an intraday lower high where you'll find most intraday traders jumping into the market after the shift of momentum has been apparent. And then that's why we have this continuation down, or well, yeah, as added reason why this continuation, this movement to the downside has continued. So what I'm going to wait to see next week is this. How does price react to 35.72? The reason for that is, do we have orders still sitting there from intraday traders who are happy to get in at a cheaper price to then see this market continue down? If we do continue down, then of course we'd expect price to at least come back down to some of these structural lows. And of course, we'd have to add in some currency strength here to identify dollar is still strong and the pound is still showing signs of weakness. If price does decide to start breaking above 35.72, I'm not going to be convinced that the market is turning bullish. I will see how price reacts to the previous structural lower low that was formed as part of this downtrend to see if price can really confirm this bullish sentiment that will now start to develop off of the back of this downtrend. So I'm going to wait for price to break above these structures, then preferably look for the retest for a continuation up for buying opportunities if that's what develops. If price stays in between these two regions here, then I'm just going to wait patiently. What I will understand in the back of my mind, or have in the back of my mind, this bullish sentiment is creating an intraday trend, a bullish trend of making higher highs and higher lows. And I'm not going to be looking to sell from 36.09 as a resistance. Rather, what I'm going to be doing is waiting for the market to come back to this key level, see if we get a reaction, and then I'll just wait for the shift again to see if I can get a continuation back down. Now, of course, neither of these scenarios need to play out, but you do need to plan ahead. And this is what planning is. And here you can see that we have two plans so far based on the current behavior, and we have a plan based on the current trend. Now, if the market doesn't respect any of these plans simply because it just continues to move bearish from this point onwards, then what we'll have to wait for is for structure to start forming as a resistance. So I'll need to see the market pushing bearish. Once the market starts to push bearish, then I'll gather the bearish behavior. Then I'll look for price to create a resistance of multiple wick rejections. And then once I get that, I have confirmation. Well, first evidence, then confirmation that there's a high chance price can come back down to 34.25. So we have three plans of action here. If the bullish behavior continues, then a break of 36.09 for buys after the retest. If price trades below 36.09, then I'm looking for the shift in behavior and looking for some sort of intraday retest for continuation back down. And then if the market decides to trade below 35.73 and we have bearish behavior or a continuation of that bearish behavior, then I'm looking for an intraday lower high or resistance to form to then take advantage of this range back down to 34.25. So that would be my plan with pound USD. The next pair that we'll take a look at is Aussie Dollar JPY. Now, last week, I don't know if you remember, but we spoke about this bullish behavior and anticipating price to continue bullish once we start breaking above these structural highs. That's exactly what's happened here. But unfortunately, you can see that the momentum shift hasn't been sustainable. What we are starting to see more than anything is that the markets have entered a range. And of course, if the markets are not creating clear structures to be trading with, then the best thing to do is just to step out of the market or leave this pair alone until it starts to clear up. Now, this wasn't difficult to trade last week, but it wasn't the easiest in terms of structure. If you know how to focus on behavior alone and then use intraday timeframes to your advantage, you can be trading this all day long. I personally would say for the majority of you, including myself, just stay away. Wait until you can identify strong currencies and or weak currencies, and then look for structures to resemble that behavior to make sure that you have added confidence that you can take advantage of some really high probability trades. I just want to say, traders, if you're watching this video and you do enjoy the content, please hit that like button for me, just to continue to share the content, to, of course, show me that you are enjoying the content, and subscribe if you're new to the channel. Welcome. Turn on notifications also, as I do post regularly on this channel. Let's move on to the next pair. So the next pair we'll take a look at is pound JPY. Now you can clearly see last week we did have a continuation of this bullish behavior back to the upside after breaking these structural highs here, but that wasn't sustainable. And you can see that we have a really sharp move to the downside. What I want to see when we have this sharp move to the downside is that price is going to disregard the structural higher low and then create the retest of this structure to then now resemble structural high, lower high in anticipation of a new lower low to be made. That has happened in line with the confluence on pound USD. We can see the behavior of the pound is showing signs of weakness. The structure on pound JPY is continuing the theme from previous weeks, showing signs of bearish structure. So that just leaves us with a decision to make. Are we looking for buyers or are we looking for sells? I think based on this structure, it's easy to say that we're going to continue to look for sells. So what I'm going to do now is I'm going to isolate a structural high to make sure that I have a level where price needs to break in order to invalidate the downtrend. And I think based on the structure here, we do have a lower high. I do like this as a lower high, but I would not disregard this as a lower high as well. The reason for that is if price breaks above this, most traders will be like, the trend is trading, it's time to look for buys. But personally, what I want to look for, just like with pound USD, is for price to confirm that bullish behavior or sentiment, and then look for a retest for a continuation up. If that happens, then of course I'm going to be targeting the structural highs where the initial reaction happened and this strong bearish move to the downside played out. If not, I want to see price trading below this structural low and this structural low in order to look for continuation sells. Now, the thing is, we are at a retest level now, but knowing the markets, when it opens, it's going to gap up or gap down. The behavior may shift to bullish before it continues to bearish, etc., just like with pound USD. So I think I'm going to want to see price trading below 151.21 to look for continuation sells. And if we get that, then this is the plans on this pair. I'm going to be waiting for price to do one or two things here, which is come back to a retest level to look for continuation sells. I'm going to look for price to continue to shift in momentum back to the downside to create that resistance level. Again, look for those wick rejections and then potentially look for those targets back down to these structural lows. We can see here, based on previous price action, this is where the market came to before, and we had a reaction. And when you get a reaction like this, don't take the structural low. Understand why price reacted like that. And now we have a structural area here where price found support. That's where the reaction happened from. This could have just been a fake out before price rallied up, and then we can start using our ranges correctly. This will be the plan with pound JPY, looking for price to break above 151.21 to invalidate that downtrend, to look for buyers back to these structural highs, to look for the retest of 151.21 to look for a continuation bearish, and or to look for bearish behavior, a resistance to form on an intraday time frame, to then look for sells back down to these structural lows. So that is a plan with pound JPY. The next pair that we'll take a look at is Aussie Dollar USD. Now you can see the consensus of Aussie Dollar USD along with Aussie Dollar JPY of Aussie Dollar strength. Even though we've had yen strength and dollar strength very, very apparent this week or the week just gone, we can also see that the dollar is holding up, Aussie dollar is holding up against both currency pairs or currencies. So with that being said, we do have a little bit of discrepancy here and a lack of confidence to confidently trade pairs like Aussie Dollar JPY or Aussie Dollar USD. And the reason for that is because if the market sentiment is illustrating to us that the dollar is strong and the yen is strong, but the dollar is holding up and pushing bullish, just like we saw with Aussie Dollar USD, then that means that the probability of that trade winning lowers, as opposed to having high probability trades with pound weakness and looking for pound USD sells or pound JPY sells. So with that in mind, the best thing to do is probably stay out of the markets until one or two things happen. Aussie Dollar JPY and Aussie Dollar USD here clears up and creates clear trends, or the yen and the dollar weakens to then take advantage of Aussie dollar strength. So bear that in mind when trying to decide what you're going to be trading in the morning. It's a very, very powerful point that I'm making here, and it's taken me a lot of years to become familiar with and experience and implement into my trading. And I'm happily sharing that with you today, because if you want to increase the odds and the success of your trading, it's not just about looking for structures and patterns and processes. It's also identifying the sentiment of the market, whether the dollar is strong, yen is weak, Aussie dollar is strong, identifying the best symbols to be trading as opposed to hedging yourself with Aussie dollar strength, USD strength, which usually creates ranges so that you can create or trade high probability setups consistently that inevitably will create that profitability that you're looking for. So with the structure on Aussie Dollar USD, I am going to leave this one alone. I'll give this one a red flag as well, and we'll just move on to some more simpler pairs. The next pair that we'll take a look at is USD JPY. Now, obviously, we have dollar strength, which is very apparent, and we also have yen strength, which is very apparent. The question here is this: do we have dollar and yen strength as apparent as pound weakness? Or are we identifying that yen is stronger than the dollar in this instance? It's a very tough one, to be brutally honest with you. And in hindsight, it's always easy to say that we would trade this and trade that. But in theory, if you have a trading plan that's based on previous history and or past data, then you can remove the hindsight and you can focus on repeatable patterns that you know is likely to develop and create trade opportunities in the future. So what I'm trying to get at here is this: the overall consensus of the market showed that the dollar was much stronger than the yen for a very long period of time. All of a sudden, we're starting to stall out here, creating structural highs where price is failing to break above. We also have a shift in behavior, which is illustrating yen strength, and we're also violating previous structures, which is illustrating to us a potential trend change. So now that we're using past history to help develop a plan for the future, we can now safely say that it's probably likely that the yen is stronger than the dollar based on how the structure and behavior is forming. With that being said, you can wait for one or two things here: patterns to develop and or a clearer trend to form. And a pattern to develop would be one of two things here. It would be a retest of the previous structure in anticipation of a continuation down, or it would be price breaking the current structural low to create the second phase of the downtrend and then look for the retest of that structure for a continuation down. The truth of the matter is this: price is more likely to come back here in the future, or is guaranteed to come back here in the future. And when it does, then it does. But the point is this: you don't want to be the first person to try and to anticipate a reversal so that you can get the biggest risk to reward and or the biggest return on your investment. You want to be trading high probability setups. That stops you from entering too many trades, losing too many trades to only then go and win a trade that you knew was going to go in your direction eventually, only if you were just patient enough to then just claw back your losses and then find yourself in a break-even position or small profit. So be patient, traders. Wait for the retest of these structures. Wait for price to confirm the new consensus of the market to illustrate that the dollar is weakening and that the yen is strengthening. Structures are forming based on repeatable patterns that you've seen in the past, and you get enough behavior to support price holding levels in anticipation of price continuing down as part of new downtrends. If you're not familiar with what I'm saying and you're new to the channel, it just is what it is. Continue to study, put your head down, and this will become more evident to you in the future, because this has taken me 10 years to get to where I've got to. So I don't expect you to understand everything I'm saying, especially when I say it this fast, but keep studying the content, keep applying yourself daily, and eventually this will just come second nature to you. Let's move on to the second pair. Let's move on to the next pair. So the next pair that we're taking a look at here is Euro Yen. Now, this is really beautiful to see this because we now add confluence to USD JPY. Even though the dollar is strong, we're also seeing signs that the yen is stronger. Now we add confluence here because we can see the yen is showing signs of strength versus a euro. Now, euro has nothing to do with the dollar, so we can't say for sure that the yen is strong, but we're adding confluences. Then you continue to add confluences by looking for levels to be broken, levels to be respected, patterns to be formed, behavior shifts to be in line with the structures, and then you can take high probability trades. So with this is a good sign. What I'm looking at here from this structure is that price had been pushing bullish for a very long period of time as well. We can also see here that price is now starting to break structural lows. Now, this is where price respected previously, meaning that if this was going to act as a higher low, then we anticipate price to continue bullish. If price starts to smash through structural lows, lows, and lows, creating new lows and violating all of the structure on the way down, that is almost a sure sign that the trend has changed. What we have here is a structural high, a structural higher low, lower high, lower low, which means the market's in a push phase. And what we want to see the market do is one or two things. Pull back to a key level to retest that structure, because as part of trending markets, we have to have the pullback before a continuation, and or violate structural lows where price has been failing for a long period of time, looking for that strong break close below the retest, and then a continuation down in anticipation for price to come back to levels where we just mentioned previously on USD JPY, they will come back to almost guaranteed in the future, which is this structural low here. So my two plans of actions with Euro JPY here is to see a retest of 129.43 or thereabouts, and or a break of this structural low in anticipation here of a retest and continuation back down to 128.01. This is a great plan of action. When price started to create this bearish move here last week, and we started to identify yen strength, I called sells on the break of this low. And as you can see, we've had this really sharp rally, a really sharp rally to the downside. We also did see that with Euro USD. So we do know that the dollar is strong and that the euro is weak to add confluence to these ideas. Let's move on to the next pair. The next pair that we'll take a look at is USD CAD. Now, again, this is not the cleanest of structures. It seems like the pound is easier to trade. Euro is easier to trade, along with either dollar strength or yen strength. When structures start to form like this and create ranges where there's no clear trend to the upside or downside, it's probably best just to mark it as a range, give it a red flag or an X, and just trade easier pairs. I'm not saying we won't trade the pairs that we've given a red flag to already, like Aussie Dollar JPY, Aussie Dollar USD, and now USD CAD. But what I will be waiting for is for cleaner structures to form in line with the new behaviors that we gather from next week, and then we'll take advantage of some movements. For now, there are too many easier pairs to be trading. Let's move on. So the next pair we'll take a look at is Euro USD. Now, as I said, we have identified Euro weakness. We've also identified dollar strength. It's a no-brainer that we should be looking for sells next week based on how the structure is formed also. Adding those confluences, what we need to do is isolate our structural highs. We also need to isolate our structural lows. And now we need to make a plan. Now, if price breaks above this structure, can we look for buys? Well, look, you'll need to add some confluence to this, and this takes practice and definitely experience. And when I talk about experience, I'm not just talking about years of experience. I'm talking about execution. Too many traders are too far caught up with having negative and positive results, constantly trying to eliminate bad or so-called bad trades and only classifying their trading as being good when they have winning trades. That is a damaging thought process or mindset that will definitely limit your growth. And I will say to you, if you want to grow as a trader, try not to focus too much on how long you've been trading or how many years you've been trading, but rather focus on just executing as many trades as you can, learning from them, discovering new patterns, identifying new behaviors, learning how to bring it all together so then you can get a good understanding of what is happening in the markets and how you can be trading them, whether the trends are down, whether the trends are up, whether the trends are or whether the markets are consolidating, and whatever else it may be. So what I'm trying to say here now is this. Trend in the market has pushed to the downside. Euro is weak, dollar is strong. We have an area here where prices move sideways for quite some time. Now, what we want to identify is where the break's going to happen. More often than not, this is an accumulation phase where we have, I hate saying these things here, but bankers, institutions, prop firms, whatever it may be, accumulating their orders and deciding where they're going to push the market. With that being said here, or we're waiting for news. But with that being said here, we can wait for a couple of things. If you want to stick to a strict plan, your plan is just to wait for the break, retest, and the continuation. If you understand how structure forms, then we understand this is a downtrend. This downtrend is still currently in a push phase, which means there needs to be an exhaustion. Based on a very strong push phase in the market, more often than not, price is going to pull back to a 50% retracement of this push phase before continuing down. And if it's breaking out for consolidation, then the likelihood is that price is going to, this is a consolidation, by the way, there's a chance that price can come back to these levels for a retest before continuation down. So what I will be looking for next week, high probability trading plan here for Euro USD, is continue with the consensus of euro weakness and dollar strength, wait for the break of 115.64 for a retest and a continuation. But if you understand how structure and behavior works in the market, there is nothing wrong with waiting for price to break above these structural highs, which is 1613, to look for strong bullish behavior in anticipation of price coming back to 1680 for a retest before continuing this downtrend. That's all I'm going to say on this one. If you know, you know. If you don't, you don't. But as I said, I've given you a high probability plan, which is a break of 1564 and a retest for a continuation down if you don't understand the way that I'm explaining price coming back to 1680. Let's move on. The final pair that we take a look at is gold. Now, gold has been trending down for the best part of a few weeks now. But in the midst of that, we've had areas of consolidation and deep pullbacks. Now, at the moment, the overall sentiment of this market is illustrating dollar strength and also illustrating a downtrend. But the current behavior is showing us bullish sentiment. This bullish sentiment to the upside was very strong. We now classify this as a higher low, and the current behavior that closed on Friday is bullish. So what we're going to have to do here is we're going to have to see price break above some key levels in the market where it has failed to break before and has reacted to. If the bullish behavior continues, then I'm just looking for a break retest, and then I'm looking for a continuation higher back to the previous highs where I know that that this is an area where price can react to the most. If the market starts to respect these structures and or doesn't break close above and or doesn't retest this cleanly, then what I'm going to be looking for is a shift, which is price respecting previous structures, breaking back below, looking for the retest in anticipation of a continuation back down again to an area in the market where we believe price will come back to, or actually as guaranteed will come back to in the very near future. Not necessarily next week, but definitely in the future. So my plan is this. If the bullish behavior continues next week, then I'm looking for a clean break close above 1761 for a retest and a continuation back to 1778, or I'm looking for a break of 1750 and a retest in anticipation of price coming back to 1724.89. So that's the analysis this week. I decided to just do it a little bit quicker, but still making sure that I'm providing value, teaching some great lessons here for you to take away, or at least giving you something to think about. The overall consensus of the market is illustrating a few things here to us. And let's take a look at this one final time. Here we can identify that the trend of pound USD is still bearish. We can also see across the board that dollar is showing signs of strength. We need to continue to identify pound weakness using correlations like pound JPY to add support to this. And these are going to be the plans with pound USD as mentioned. Aussie Dollar JPY is showing signs that the Aussie dollar is strong, especially when we're identifying yen strength and dollar strength. And we can see that this is sustaining this bullish structure from last week. Current behavior of the market is bullish and is respecting structural lows. I think this needs to clear up before we trade this further and or get some news that helps support the bias that we plan to carry forward moving into next week. Here, this is just correlating really nicely with pound USD. I'm going to say honestly that the trends or the structures on pound USD and pound JPY are not 100% clear, but what is clear is that the yen and dollar is strong and pound is weak. Hence the reason why we've come up with these plans. And I think that these plans here are really solid plans for continuing the consensus of, the sentiment of the market that we've already identified this week, moving forward into next week. USD Swiss franc. I mean, I'm sure I put a red flag on this, or did I absolutely skip this one? Very interesting. I think I did skip this one. So good thing that we come back to it. What am I thinking about USD Swiss franc here? Well, dollar strength is not apparent at this moment in time. Swiss franc strength is not apparent at this time. The trend in the market was pushing bullish with a failure to make new highs and a bearish shift to the downside, indicating Swiss franc strength. But I'm not convinced. I think we have a retest level here where price reacted to previously with a structural high. You know, there's always a reason for everything here. And I don't think that I'll be trading USD Swiss franc. Again, I think I'm more focused on euro weakness and pound weakness. And I think that's enough moving into next week. This could clear up for sure. We could look for tradable opportunities, but I think I'm going to let this one go. Aussie Dollar USD, we know why we're not trading this, because Aussie Dollar is staying strong versus a dollar and the yen, and that could create some really, really bad or force us into making some really bad decisions, because we might want to trade this in line with dollar strength and look for sells. But if we disregard the behavior, which is bullish and also dollar strength, then you're screwed. So I think for now, this is red flag until this clears up. USD JPY. Now, this is the thing with this one. We do need to see this develop and create cleaner structure, or continue to create the structure that it's forming in order to continue to validate yen strength. So I think it's fair to say that we're not going to use 111.32 as a retest level, because I think it's too close to current price action, and the overall consensus of the market still continue bullish. But the way the price has broken this brick wall for the first time in a very long time, I would be very happy to look for sells at 112.01, because this is the last high where price created the momentum shift to the downside. If we get good reactions from this level, I'll be happy to sell it back down. Preferably, I would prefer to wait for the 110.97 break and a retest to stay in line with the current consensus in the market, which is showing signs of yen being stronger than a dollar, and the structure shifting, breaking structural lows and creating potentially a new reversal trend, which is bearish. So this would plan with USD JPY. Again, I maintain what I said. I still like the idea of pound weakness and euro weakness. Next, we take a look at euro yen. As I mentioned to you, I really like the sells on the break of 128.62 for a retest, and a continuation back down to 128.01, and or a really nice deep pullback, because we're in a current push phase, to 129.42 for a reaction, and then see a continuation bearish. USD CAD also is showing signs of price ranging with no clear directional bias. Even though we have dollar strength, we do have, again, price action that can confuse us a lot. And if we stick to our guns with just looking for dollar strength, looking for buyers at support levels here, you can see we would have disregarded the behavior of the market and been caught out on these sells. So I think I'm going to wait for this one to clear up also. Euro USD, I really like the structure of this market, and I like the way the confluence lines up across the board here, because the sentiment is dollar strength, euro weakness. The structure is definitely showing dollar strength here. The trend is down. We're currently ranging at the moment, so moving sideways at an accumulation area in the market where buyers or sellers can step in at any time. I still think that 1680 is a valid level in the market where price would need to violate first before we see a trend change. And I do think that if we're going to look for buys as part of an exhaustion trade back to the previous consolidation, then we need a strong close above 1613 and a retest continuation, or preferably a high probability trading setup based on the trend and the market sentiment would be a break of 115.64. Finally, we have gold. Current behavior is bullish. Do not try to incorporate dollar strength here with gold, because this has a mind of its own here, and that's why a lot of traders get caught out. But I think based on the current consensus of the structures and the behaviors here, we would look for a clean break above 1761 and a retest continuation back to 1778, and or a continuation shift of momentum back below 1750.94 for a retest, and a continuation back down to 1724. So that's the analysis this week, traders. I hope you thoroughly enjoyed it. As I said, I tried to do this just a little bit quicker, because some of you have mentioned that 40 minutes is too long. I don't even know how long this is. But to be honest with you, I would watch the whole thing if it was me. But I know some of you have got families and other commitments. I hope this was of use to you. If you enjoyed it, smash that like button for me. Turn on notifications for when I post my future videos. Subscribe if you're not already subscribed. And I just want to wish you an absolutely fantastic week ahead. And of course, as I always say, continue to trust the process.